Hi, good evening, everyone. Welcome to Sunday TTR. Alexis here. I'm just going to jump right into it and have a chat about bonds this week. Now, what's really happening in the bond market is pretty important right now because there are a couple of catalysts that has pushed Trump into making certain decisions in the market as well. So first up, I do encourage, everyone to go read up on their own. It's very simple. Just go to Investopedia, and look for 10-year Treasury bond yields. Why does it matter? Why is it important? Because in this season, I think bond yields will kind of play a part in how I think things are happening in the US as well. So the confidence in the US economy has been dropping, right, because of the Donald Trump tariffs. And the US does not normally see high interest rates on its debts as the bonds are kind of viewed as a safe investment. But last Wednesday, the rates actually spiked sharply over here to touch almost 4.6, right? Touch 4.5, 4.6. Then, before coming back down to about 4.4, and then I think on Friday it ended up almost nearing to 4.5% again. So the rise came right after Trump pressed ahead with sweeping tariffs on goods being imported in the US, while Trump's trade war with China escalated further, although he did say he will put a 90-day pause on higher tariffs for some of the countries. He actually implemented a 104% tariff on products from China at midnight on Wednesday, and then Beijing hit back with 84% levy on American products. And then later on, Trump retaliated with a 125% tariff on China. So stocks have been falling sharply over the past few days in reaction to the escalating global trade and the fears of tariffs leading to higher prices, right? So um, the sale of bonds in the US actually poses a big problem for the world's biggest economy right now. Now, the interest rate or the yield, right? So this 4.497% over here is the yield for US government borrowing over the last over 10 years. It spiked sharply in just the last couple of days. So initially it was trading around 3.9% and it spiked to about 4.5%, the highest level since February itself. All right, so February it's I think just after February, it's almost it was just under about 4.5%. So it really spiked after that. And the spike kind of spooked economists because US bonds are traditionally seen as the so-called safe haven for investors to put their money in times of financial turmoil. So what does rising bond yield mean? Rising bond yields actually mean higher costs for companies to borrow and of course governments too, right? So bonds usually does well in times of turmoil as investors kind of flee to safety, but Trump's trade war is now undermining the US debt market. So while interest rates on US government debt rise, the price of bonds themselves fell because of the weakening demand due to investors unwinding and offloading them. And one reason US borrowing costs have shot up was because, there's an erosion of bonds being seen as a safe haven. So there are some concerns, of course, over the impact of tariffs on inflation, and US government budgets were also some of the reasons of this situation in the market right now. So the question is, will the Federal Reserve step in? Some analysts suggested that, the US Federal Reserve might be forced to step in if the turbulence continues, very similar to what happened in the Bank of England's emergency action in 2022 following Liz Truss mini budget back then. And they are wondering whether the Fed will step in with emergency purchases of US treasuries to stabilize the bond market. So very hard for investors to predict right now because I think it's so-called uncharted territory, but what the bond market is implying is that that investors are actually losing faith in US assets. And this actually kind of curiously enough is Trump has always wanted a weaker US dollar even before he came into the seat, right? He wants a weaker US dollar, and I'm wondering now whether this is one of his ways to get his weaker USD because the US dollar has been softening, over the past couple of weeks as well. So concurrently, you have also the stock markets, in falling off. Um, and they are wondering now whether US is going to go into a recession in a huge big question mark. Now, how I would view this bond situation is just to keep an eye on the US dollar JPY. Now, the US dollar JPY, the dollar Japanese yen, traditionally is almost like a proxy for the US government bond yields. You will notice that if I put up the chart over here, you can see that it kind of is pretty strongly correlated. So if I track the US dollar 10-year yields and the dollar yen, you can see that traditionally they move very, very similarly over the last couple of months, last couple of years. But recently, it's kind of having a diversion over here. A little bit of change happening over here. And you can see that this shakiness in the bond market is starting to happen. US dollar sold off, but bond prices spiked up. So there is a bit of diversion over here. So the question now is how can investors gain a little bit more confidence in the US to take advantage of the higher bond yields, and whether or not there will be a spike in demand for the US dollar in the short interim to kind of catch up with bond prices. Now, I don't think this is going to happen in the short term. I think the market is very uncharted territory, but I am keeping an eye on this because I'm wondering how the pop in the bond yields will affect the dollar Japanese yen. Now, I'm not particularly interested in trading the dollar yen. What I'm actually interested in trading is actually the dollar sing. And let me explain why. Now, uh, if we trade the dollar sing, so I'm just going to go to the dollar sing over here. What I really am curious is because number one, the Monetary Authority of Singapore is very famous for intervening in its currency strength, right? And if I zoom out over, you can see that traditionally, or historically rather, especially the dollar sing usually lives in an area that is a nice kind of median area. Let me go into a weekly time frame to kind of show you that. Okay, so this is a weekly time frame, and what is pretty clear is, with market intervention, the majority of the time, right, all the way 10 years ago, this is 2015, all the way to 2025, you can see price, normally lives in this space. Okay, so it stays somewhere between 1.33 to 1.37 most of the time. And of course, there will be times where it overshoots into highs, temporarily and then spikes back down. But the majority of the time, price actually ranges between the 1.33 level to 1.37 level. Now, it gets interesting now because price has broken out of the traditional range of this area. It is now below the 1.33 level, heading towards maybe a 1.30, I'm not sure, or we have a previous low of 1.28 happening here. Now, will this 1.28 happen again? Not too sure about it, but if you kind of keep an eye on the news that's happening in Singapore, you know that tourism plays a huge part in Singapore's economy, which means it stands to reason that the Singapore government doesn't really want the Sing dollar to be too strong. A strong Sing dollar is good for inflation. However, current inflation figures for the dollar Sing is only about 0.9%. So it's very, very well under the average of 2% across the board. So it does mean that they don't really need a stronger Sing dollar because inflation is already at a level which is on the controlled side. And on top of that, we have election coming, we have tourism being of a concern to the Sing government as well. Because if Sing dollars is too strong, then it will kind of hurt tourism, in the long run as well. So what I am looking for actually is potential buys of the dollar Sing, with a concurrent, it's either money will flow, demand for US dollars will flow back due to the higher yields that are happening. Let's wait for the market to settle down and see whether this cool off in the Trump tariffs brings back confidence into the US market. It's a huge question mark right now. But what I am actually betting on is not really the move of the US dollar, but is the reaction of the Singapore government over here. So I do want to see whether or not there'll be potential buys at the 1.30 level, or if price does go down to the 1.28 level, this would be a good time to accumulate some of the dollar Sing moves as well. And if you actually look at the JDL securities, right? If we actually look at the specification contracts for the dollar Sing, we currently have positive swaps for dollar Sing long position. So as long as this is a positive swap for a dollar Sing long position, I am pretty interested in looking for dollar Sing longs at this point. So it would look, let me just open up a new chart over here. Okay, this is a dollar Sing long, and I think, let's go fundamental. And I think you can actually see I've already got two small limit orders that haven't quite entered yet. Now, this is really, really conservative. My stop loss is all the way to the bottom over here, the previous lows over here. And it's very, very small risk, 0.01. It's just wetting my feet, trying to see whether these three technical candles, will result in a V-shaped recovery, push to the upside, whether or not the sentiment will flip on on Monday, which is tomorrow. So this is a question mark. I wouldn't encourage, putting this trade. It really is a very, very small testing trade for me to kind of see, whether I can catch that move to the upside, because there is a very nice, decent level of support over here. However, if this level is broken, then I will prefer to wait for a 1.30, which is somewhere around this line over here. And if this is broken, then of course my next buy area is going to be about 1.28 level. So these are the levels that I'm looking at on JDR Securities over here. Okay, so this is a weekly candle, big candle. If we use the daily time frame with three big, huge candles over, the question is whether or not price will further hit down to the 1.30 levels, but this is a very big question mark that I am looking at. But I do see a little bit of a soft support level over here on the about 1.31 area. So this is where I'm looking for the first level of support. Price is being tested. Again, the trade for the dollar sync is more of a medium long-term trade. I plan to slowly accumulate the dollar sync back up to at least a 1.33 level conservative TPs to a 1.35 in terms of a longer term TP. One eye on the Trump tariffs, of course, and again, another eye on the yields now, because I want to see if the yields remain high, whether the demand for US dollars will come in to help push this trade towards the upside. Now, the other pair that I'm looking at is actually Brent. Okay, now why Brent? Okay, because on JDR Securities, Brent also has positive swaps. All right, so if we do Brent over here, okay, Brent actually does have positive swaps as well. Let me show the specification. Okay, it has positive swaps on the long direction. Whether the time to buy is now, that is the question. So my yellow color horizontal line of vertical line over here, this is the line where, okay, over here, this is the line. Let me go weekly time frame. This is the line where the Ukraine-Russia war actually happened. Now, the difference between Brent, AXBR, Brent, and WTI, or in JDR Securities it's called XTI, is just the location of where the oil comes from. So XTI is mainly US oil, produced on land produced from US land-bound areas. Brent is the European sea oil, which means the oil is extracted mainly from the seas, and also meaning that storage and transportation is slightly cheaper in the Europe side. So Brent is usually slightly price slightly different from the XTI. You can see there's about $3 difference over here, and and it really is due to the transportation cost. So XTI is slightly cheaper because it's a little bit more expensive in that sense to kind of move the the product around. And I'm wondering whether there is a little bit of dissonance coming over here. So if we go look at the two, if you see Brent and oil together, okay, it's just a different area of where it's coming from. So this is on top is WTI, at the bottom is Brent. You can see the prices move very tangentially, very, very similar price movements. And what is really, really curious about is that there is a little bit of a very similar price movement over here, but because of the tariffs, I'm wondering whether demand will shift away from WTI and into Brent. All right, so I'm looking for a long position somewhere over here. Now I like to use WTI as a benchmark because it is one of the most widely tracked price takers in the market. But my curiosity is whether or not, right, there is going to be a dissonance in Brent if demand starts to shift due to the tariffs, So I'm really wondering whether tariffs will kind of affect the prices of oil over here, and particularly, especially where it comes from. And not forgetting, Canada is also, part of the WTI index where the production of oil is also landlocked, okay, meaning they drill the oil on land and they got to transport it over the land for storage and all that. So it's a little bit more troublesome in that sense to transport oil in the US and Canada. All right. So I do want to see where this is going in terms of prices, and there is positive swaps on Brent as well. Okay, so having positive swaps on Brent, I think if I do this, you might want to see. So I'm using WTI. Again, I use WTI as a benchmark because it's just one of the widely traded ticker, right? And there's a lot of people monitoring this chart. So if I go on a weekly time frame, what is really interesting over here is somewhere in February 2022, which is somewhere over here. Let me put another horizontal line here for clarity. It's the Ukraine-Russia war. You can see that pre-Ukraine-Russia war, oil was trading just slightly above 65. WTI 65, and then it headed up. Of course, after the wall, after the wall, it spiked up and then headed back down. This gray area over here, this is the COVID period, so it doesn't quite count. But even prior to COVID period, where oil generally lives, right? And oil is a very price sensitive product, so it actually lives between the levels of $50 to $65. So if I zoom out a little bit, plus minus times of uncertainty, the average area of price to kind of survive in terms of price points, given inflation and all that, is somewhere between 50 to 65. So price has very, very aggressively broken the 65 level, kissed the $55 level, and I'm wondering whether or not it will make a move towards a $50 level. What I am prepared to do is I am prepared to find out if there is shorter time frame trades for me to kind of enter into Brent. So while I look at oil WTI for the general idea of where price is going, the actual trades will be performed on Brent itself. All right, and what I really do want to see is whether or not we can get positions in Brent to kind of hold it and kind of earn the swaps at the same time. So I'm pretty keen to kind of see whether we can, position some buys at the 55, which kind of kissed and price is now back up here already. Very, very fast move. $5 cleared just within I think how many days? I think it took just about, if you go to a daily time frame, it took about just almost 1 day to touch, and then the next day is back up here. So I'm wondering whether there'll be a retest of this level. All right, retest of this level. And I do prefer to place buys here as opposed to here. Mainly because I have a suspicion that if Trump flip-flops on his tariffs again, we might see, the economies pushed into a lowering of demand because of the fear of recession. So conservatively, I would prefer 55, but I'm pretty sure we could find some positions to get in just below the $60 area. At $60, it is really okay to kind of look for some short-term longs, but I really, really am a bit uncertain over here because of the range that it's kind of bound. So I do prefer to trade upper and lower ranges of the levels. So if this is a 4-hour chart, upper and lower levels of this would be somewhere between maybe $62 for a TP level, but entries probably either about $56 to $58 would be a nicer place to enter as opposed to 60. 60 is a little bit too close to the TP level for me, so I don't really think price is going to shoot above and below here in the short term. So I feel that it's really a range play. But what I do want to execute on is I do prefer to hold buys because Brent has got positive swaps. So it's a little bit easier to hold on to the trades if it has positive swaps as well. So again, do manage your risk on this, because if you manage your risk on this and you can hold it for a couple of weeks, couple of months, the swaps actually come into a very nice, it kind of helps having positive swaps on the trades. But make sure you find those entries and not enter too early. So I want to see Monday, Tuesday kind of shake out first before I find entries probably on Wednesday or Thursday. All right, that's all for me this week. Thank you for joining Sunday TTR, and I'll see you guys when I see you guys. Cheers, everyone. Bye bye.